And the market, recognizing that there was an oversold market, started to buy. You can't have the market go up without the tech sector go up. And it's not just tech. These are consumer discretionary. That's Amazon, the communication services, that's Facebook. They are the biggest cap stocks in the world. And so if you're going to have the market rally, which it did because it was 14 times earnings, they need to participate, and they have.
Okay. Are we too expensive now, though? Right? We were at 14. Now we're like 17.
Well, we're 16. I'd say we're 16 times, and the market got to 17 times earnings, and earnings are higher. We've had a nice fourth quarter so far. I think that there's some more room to run, but the good news is we've had nice earnings. We've had participation. It's sector breadth, but we have to be careful that we might be hitting a point where back at 7%, we're at the peak. And you have to be concerned about how fast the markets run.
Okay, Pete, so staying with this tech deal. Yeah. Semis above 200-day moving average, first time since October. Yep. Just to give you, some of the names, and some were on the wall. AMD, Micron, Lam Research, Western Dig, Xilinx, Skyworks.
Yep.
Take your pick. Look at these jumps off the December lows.
Unbelievable moves. And we've had a lot of option paper, but it still remains very, very short term, Scott. So that's one thing that I think it's a very important, to Kari's point. It's a very swift move to the upside. We've had swift moves to the downside as well. And we always talk about algorithms. I think there's been some algorithms moving to the upside as well.
Those gains are crazy. I mean,
absolutely.
Throw those back up there. Just
in the span of time of these gains, you're absolutely right. But in many cases, these companies that have already delivered really did deliver. And they delivered earnings better than people probably expected.
Give me the chip ones. Give me the chip ones, please.
Yeah. And as you do, by the way, I got a little tease for you. I've got one of these chips, but none of the ones you just showed. It's going to be on the unusual activity today as well. So I'll tell you what, the chips are on fire. One of our guys at Investor put out a great article today talking about the chips. Joe's been talking about some of the names that are actually the manufacturers. It's unbelievable. Applied Materials is great, but what's the one, Joe? You've got one.
Teradyne.
Teradyne. Mm-hmm. Those are the offensive linemen. But the sprinters, the wide receivers, the running backs and quarterbacks, that's Micron, man. That's NVIDIA. That's all these names, Intels of the world that are just absolutely...
The Patriots of the world.
The Patriots of the world.
Hey, that's enough of that.
There's the woman who just came from the parade yesterday.
Deservedly so. All they do is win up there.
Always gloating behind the scenes. Now we'll give her some props.
Semiconductor index peaked on February 1st, 2018, has not made a new high, is actually still 12% below its high from last September. I have no idea what we're celebrating, other than you've had a really successful bounce off an oversold low.
But you don't think these gains are impressive?
Well, yeah, they're very impressive, but in context, you're still lower than where you were Labor Day. So I don't understand.
I don't know if we said celebrating, though, Josh. I think what we were just saying
it's nice that they didn't go lower.
No, but it's an incredible move.
People made money who bought the dip.
Yeah. It's an amazing move in a trading environment. It's still 100%. Very much trading environment. So no celebration here.
I 100% agree with that. I'm just looking at the SMH, and what I'm saying is it's very, very emblematic of the overall market. You had no stocks above their 50-day moving average on December 24th. Now you have almost every stock above its 50-day. This is a radical comeback for the whole market, and semis, price-wise, absolutely are emblematic of that. However, in context, people forget, you have a stock go from 10 to 5, it's down 50%. You need more than 50% to get back to even. You need 100%.
Look, you could go down from the wall that we showed you. You could go down that list, and while the gains are impressive, to your point, you're still, if you're Alphabet, you're still 12% off your 52-week high. If you're Amazon, you're 20%. If you're Apple, you're 26%. If you're Alibaba, you're 20%. If you're Netflix, you're 18%. We get it. That's not to say that this comeback hasn't been impressive.
And it's fast.
Our question is it sustainable? Is it too much too fast?
So now the chatter that you're going to hear, and I asked for some charts to be made up, the chatter you're going to hear now is about a challenge at the 200-day moving average. We really haven't had a downtick all year. Today is like minor. I wouldn't even consider a real downtick. But maybe it's not coincidental that that's coinciding with a run at the 200-day. So as you can see right here, we are now bumping back up against that level. It's not a physical barrier. It's not a wall. It's not a fence. It doesn't exist in the real world. But it is a level that people will take note of, possibly change their behavior if we can close above, especially if volume is good. So to me...
Does it have steel slats?
So, it's got...
Can they go under it or over it?
It's a very smart, very beautiful wall.
It's a smart moving average.
Terrific.
The best wall.
To your point, as you make this point, The S&P is going for 6 days in a
That's
row.
your first real challenge of my point
It's
is
the longest in a
let me
year.
button this up. The first real challenge of whether she asks the question, is it sustainable? Well, so let's see, because now we're at a level that is psychologically important to people. We're at a level at which algorithms may or may not be selling or buying. Let's see if the will is there to take this market back up above its 200-day, but then let's also recognize it is a declining 200-day moving average. It's not flat and it's not uptrending, so let's take it with a grain of salt when it does.